Retail rents are expected to crash. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I have my stein of coffee and I thought we'd have a look at this article from the Australian Financial Review regarding the expectation that retail rents are set to fall, I would say crash, by 30%. Now, for months now we've been looking at the retail recession, the Armageddon that is happening in the retail sector. Every day it seemed to be another business was cutting staff, and this was before we had this pandemic lock down the world economy. Earlier today we were looking at the horrific treatment of customers by Webjet and of retail landlords, large format retail landlords, threatening their tenants or reserving their rights to enforce the requirements of their contracts, even though those tenants were taking steps to ensure the health and safety of their staff. Now let's have a look. Let's have a look at just the Centre Group's price at the moment, and I've brought up the 5-year chart. You can see since the beginning of January this year, it was at $3.90, nearly $4. It plunged to $1.62, shot back up to $2.15, and, well, is down at the moment. So what's going to happen with these businesses? Will there be a cultural change? Are people going to be more inclined to shop online? Well, I can tell you for one, in our household, Rachel has been doing a lot of shopping online, just buying odds and ends for our new baby. Never done it before, would always go shopping, but she's ordering online because, I mean, it's a lot easier to do. And I don't see why that'll change. The only thing is delivery costs and the odd move by Australia Post to apparently change to one-day deliveries. That's going to create opportunities for private providers, I would say, in the market to fill that gap caused by, well, frankly, the state's incompetence. So let's have a look, guys. Let's have a look at this article. Retail rents could fall as much as 30% over the next 2 years, driving down property values as the pandemic shutdown accelerates the decline of the once dominant sector. Now, this is important to all of us because a lot of people will have super that is invested in these retail shopping centers, and a lot of them have done refurbishments or are doing refurbishments of the centers. I know that because just in my small little business, I have encountered a lot of them in the last 6 months to a year, either in our scanning and modeling business or in our architectural business. So, I mean, they need to reinvigorate these centers. Will Australia end up like the US with the number of ghost malls they have? I don't think we will. Our square meterage per person is nowhere near as high as the US. We're really high with square meterage of shopping center per person, but we are nowhere near the States. They're just crazy. But it's definitely going to affect it, and it'll be reflected in the stock market and these real estate property trusts that are heavy in retail. The devastation across retail will expedite a wide-ranging reset of rents and assets that was already underway as the sector negotiates the challenges of e-commerce and softening sentiment, according to analysts. The current situation accelerates the de-rating of malls in line with their offshore peers, but also accelerates the rebasing of rents. Jefferies analyst Sholto Makonochi, I know I butchered that, told the Australian Financial Review. The widespread shutting down of shops through the biggest malls, with similar closures along the suburban strips, and a widening rent strike by large and small retailers alike. We saw that with just Hungry Jack's as well going on rent strike, even though they've got drive-through and continue to operate, but still they're on rent strike, have triggered losses for listed and private landlords. So there you go, guys, and that's going to affect the share price. Now, do you think they'll bounce back? Do you think this will be a good opportunity to pick up a bargain? Centre Group is down 50%. Would now be the time to jump off board and grab some? Or is this going to be a systematic change? That's the question. How would we measure that? Maybe we need to look at online buying habits. Afterpay has shot up, hasn't it? Because it's now, I think people can use it with eBay and things like that as well. That's worrying for a whole lot of other reasons, but Is that a sign? Mr. Macho Conchi, sorry mate, expects rents to fall between 20 and 30% over 12 to 24 months. Macquarie analysts are factoring in a 15% decline in rents over a longer period, with greater declines possible, along with a similar write-down in values for big shopping malls. So, a 15% write-down in the value of shopping centres, some of these assets of these biggest businesses. Maybe this is why the likes of Stocklands are moving away from some of their centres and, already sold $500 million the last time we looked at it, on their plan to sell another $500 million and go into more logistics. Aldi is selling some of their distribution centres here, and there are people lining up to look at them. So we think a lot of retailers won't get through. Despite the stimulus, if you were weavering before this, you're probably not going to make it. It accelerates the demise of the weaker retailers, he said. He's right there. He's right there. This is going to prop up some people. Some people are if you're on the line, just running on fumes or barely scraping past and hoping for a turnaround, this is just going to be the end of it. Some people are going to walk away. They're going to go, yep, had enough, I'm out. On the other side of the shutdown, a recovering retail sector will require less space, weakening the negotiation position of big landlords such as ASX-listed Westfield operator Centre and Vicinity. Let's have a look at the Vicinity. Vicinity Centres ASX. Let's look at their share price. They're down 3.4%. Let's look at the 5-year. There you go as well. Boom. Look at that. Did anyone short this in January? Drinks are on you. An early guide to the potential impact on landlords came this month from the GPT, which revealed that it had slashed the book values of its $4.5 billion unlisted fund by 11% as it readjusts its assumptions for market rental growth, restricted trading conditions, and vacancy downtime. Decades-old leasing structures based on annual increases could be jettisoned in favor of more innovative agreements based on turnover rents or through greater incentives. Well, so there are going to be some changes. They're actually going to have to put a little bit of effort in to get their increases. Smaller, high street landlords will face empty shops, will capitalize as well, accepting that a lower income is better than no income. I wonder if we'll see that. There's so many empty shops. People are sending me images of empty shops, at least in suburban centres. And I did a walkthrough of good old Australia Fair, and it was quite depressing. Eventually, they'll have to meet the market. There's only so much time you can sit without rent, he said. You only have to drive down Oxford Street, King Street, or Military Road in Mossman to see how many shops are closed. So no salve for landlords. The number of household retail brands cutting rent is growing by the day, from discount pharmacists such as Chemist Warehouse and Priceline, to fast food chains including Hungry Jack's and Red Rooster, to the stable of names run by Solomon's Lou's Premier Investments. The March surge in retail sales, the strongest rise on record, will prove no salve for many landlords, given much of that activity revolved around panic buy of items for basic needs such as toilet paper. The toilet paper retail boom. Who would have thought, guys? Who would have thought? Toilet paper of all things. Owners of smaller neighborhood malls anchored by supermarkets will benefit though. Figures compiled by Release Platform, which manages around 40,000 commercial leases in Australia alone, showed the extent of arrears already mounting in April. By April 20, less than 2/3 of the rent due across all commercial property sectors have been received by Release's clients, compared with the usual level of about 87%. Oh boy. Amounting to more than $100 million in unpaid rent. Retail has been the hardest hit. Many of those retailers were already struggling because of online shopping. This is going to be a potential fatal blow for many of them, Release Chief Executive Tom Wallace said. Whenever there is an increase in vacancies, you're going to see a decrease in rents to match that. Resolution Capital Chief Investment Officer Andrew Parson, who has been underweight on retail for some time, said the pandemic had merely compressed the scalar or secular issues facing the industry. He noted that in the UK, retail rents were coming off 40% even before the onset of COVID-19. There you go, 40% cut. In every market, retail was overpriced before the illness. This is the elephant in the room, he said. Well, there you go, guys. There you go. Retail is going to cop it. The value of these companies is going to cop it. It's going to be interesting coming out of this. I still suspect habits will change. We'll have to see how that's reflected. Anyway, everyone, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can share the content and help the channel grow. You can support the channel via becoming a member on YouTube or Patreon. You can use our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. Buy our merch from Teespring or the HeiseSays blog. Send us gold using Gold Pass, and support us via PayPal. Thanks, everyone. Have a great day, and I will see you next time. Bye for now.